Hello, everybody. Today was a crazy day, obviously, with the Dow going down not quite 400 points early in the day and then turning right around and heading back to the upside. Basically, on the NASDAQ, what it looks like is a big shakeout day. So you got big volume here and you shook out. You didn't undercut this low. You basically were taking your cue from the action of the S&P and also the Dow. And you came off the lows. Things are looking pretty ugly, but we did get the move I was looking for, where I thought for sure we're going to see the S&P bust the 200-day moving average. And once that happens, this is seen as a long-term area of support, the 200-day line. Once that happens, everybody becomes bearish. And so volume actually was slightly lower according to this chart. And we ended up holding the 200-day line. You undercut the lows from last week and you turn back to the upside. Now, does it mean we're out of the woods? No, but it does show that basically you're in a trading environment where you have to be quick on the draw. And if you're slow or you're not using the 620 chart or something similar, some other device that's going to guide you on an intraday basis, you do run the risk of being whipsawed, because this market can look real ugly on an intraday basis and then suddenly turn the other way. And we've seen that happen many times before. So, you know, you've got to have some way to control your risk. Also, recognize the reality that we're not in an investor's market. This is not a market where you take positions and seek to hang out. It's mostly a trader's market. And I find that on the short side, in particular, a lot of the time I'm just hitting things and trying to get a good, 3, 4, 5%, maybe more, 10% in one day, and just keeping a hawk's eye on my 5-minute 620 chart. So I did want to go through that on a couple of names that I was playing today and just show you how I was using the 620 chart. Now remember, your 620 chart, you've got this orange line here is a 6-period exponential moving average. So 6-period would be one period on this chart is 5 minutes. So one bar is 5 minutes. So that would basically be a 30-minute, 6 times 5, 30-minute moving average, or 6-period moving average. And then this is a 20-period. So 20 times 5 is 100 minutes. So that's not quite a couple hours. Is that right? I think so. Anyways, hour and 40 minutes, I guess, but we just call it a 20-period moving average exponential. And then we have our MACD set up to 620 and I think 9, and then close, which is a C. But basically, this line is set to 6, the orange line. That's your fast line. Your slow line is set to 20. And I'm not sure what, if you're using a signal, I guess that you would be using the same settings as me, which I think is 6, 20, 9, C. In any case, you also want to click on the option to have pre-open and pre-market and after hours data on your 5-minute charts, because I do use that. I do use a chart in pre-open. A lot of times I'll use it, and I'll even use it sometimes in the after hours when you got something rallying. A good example would be something like Tesla yesterday. Whoop, get that L in there. But yesterday after hours, this thing, you can see it rallied after the earnings report came out. So basically, let's look at this a little bigger. Basically, this 1300 would be 1 o'clock, so that would be 4 o'clock Eastern time. So this is basically your close here. They come out the earnings announcement up here, but you can see you've already gotten a cross here, but you did have a cross here. Finally, get a MACD cross right around here, right at around 300 or so, and you get one rally up into the 20 period, and then boom, it breaks from there. So that you actually could have used the 620 chart to short that in the after hours, and that's why I use the data, all data throughout the day that's available on the chart. Now this morning I put out a blog post and I talked about 3 stocks, Logitech, Dexcom, and Data. So this morning you opened up, here was the opening at, let's see where 630 is, would be right, well, this bar here, this would be your opening bar. So as soon as you open up, you spike up to 96 and you immediately reverse. And what usually, this is a difficult one to play, because by the time you get an actual MACD cross here, you're trading at around 91, 92. So you really had to be watching for this on the what I call the MACD stretch. The MACD is getting up there, and you just take a shot. I don't take a huge position, and that worked because if you're waiting for the 620, a full 620 signal, you would have gotten it here, but you got a little bit of a cross here, so it's a little bit difficult. But once it breaks down, now I get this sharp move right off the bat, and then what I'm noticing is that you're getting a MACD stretch on the downside in here, and you're starting to turn back to the upside, and you cross in here. So I'm actually taking profits out and getting, I think I covered like just under 91. So, I got like $4 out of the trade. So I'll take it. You go short 5,000 shares or whatever, and you're making some nice lunch money. The other one was Dexcom, which is a little trickier, but it was the same basic concept. We opened up, let's see, where's our opening here? 6:30. You opened up, and the thing just started streaking to the upside. So it opened up at around here and just kept going. And I'm watching this thing going up, 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 up. And then finally, you get a MACD stretch here and a cross. And that occurs over around, I'm going to say 82, somewhere in there. But I'm already operating on the basis of the MACD stretch and putting out a small position. So, I won't put out very much, maybe a 10, 15, 20% position. For me, that's pretty small, but I won't put out very much. Just to give you an example of how big I'll go on things, I actually, when the market turned, I went long a 200% position in Intel just to play that trade off the lows on the turn. But that's another story. In any case, once it started to break down, you got down in here, you set a low, you're already starting to stretch to the downside, and then you came in, you undercut that low here, and then it starts to turn. So at that point, you're getting the cross. So at that point, you're basically out. And again, 2, 3, 4 points of profit. And that's what you had early in the morning. And I just found that I was making pretty good money right away. And a lot of times in this market, you can just kind of go by the fact that you're making some pretty strong profits right off the bat. And you know that I've talked about this many times before, that in this market, when you go short into an early morning gap up, usually the fat part of the short selling play in the market that morning is in the first hour and a half to 2 hours. And then the market will spend the rest of the day chopping around, and then maybe towards the end of the day do something more decisive. Not always so, but that's generally how it works. And I guess, money comes in and sells down everything, and then everything starts to turn back around. And you could actually, if you're open to it, and I certainly am, once you start to get out here and you cross here and you start to turn, you can see that you're getting a turn to the upside. You could actually go long this thing and pick off another 2, 3 points on the upside. So this is one way how, I like to use a 620 chart to trade things both ways on an intraday basis. And it may not be investing with quotes around it, but it is trading and it is profitable. And I am up pretty good over the last week or so doing this sort of thing. So the last one, I'm just kind of proving that things don't always work out perfectly. Well, this one actually did, because you came in here, you're opening up around here early in the day, pre-open, like way early, and you could be putting it out, but you had one move up here where it rallied up to 40.20 because you opened up down here, and then you rallied, so you're watching the rally, and then once you get a cross in here, but you're already up there, and it starts to roll back. And I'm not sure how I picked this one up. I think it's based on the fact that there's a pre-open high, and so you're right back at the pre-open high, and I'll short it on that basis too. So that's another way. I'll just look at where it's trading. So you set this high. I won't count this because it's happening at 4:45 my time, which is more than an hour before the open, an hour and a half before the open. And then you get a rally in here, a little bounce in here, right at around just before the opening, a half hour before, and then you break down ahead of the opening bell, and then you get a rally back up to this level. And sometimes if I see that, then I can use this prior high as a reference for a stop if it goes too far past that. And then it breaks, and then you get a nice turn off the lows. You undercut this low here, and based on a closing basis, you're undercutting these closing 5-minute lows and undercutting here. And at that point, you're thinking, okay, you can take your profit, or you could just sit with it and wait for the cross up here, because once you get that, then you can be covering. If you look at something, a lot of stocks, for example, Square today posted a pocket pivot, and it got blasted right at the opening. It was already, it was trying to rally early in the day, and then it failed, but then it turned, and you got a 620 cross here and here in here, so it started to rally at that point. You got another one in here and here, and so it was actually working pretty well. But the whole time, it's a little sketchy. It's difficult often to play these names in a volatile market if you're not oriented towards trading them. And also the other thing is you want to be open to whatever's going on. In other words, I don't come in, if I come in with the idea that I'm going to short Dexcom and I'm going to short Data, um, and a couple other names that worked pretty well this morning, it doesn't mean I'm a perma bear. It means that I'm just playing these things because I think they're coming in for a few bucks, and then I'll trade out of them and see where I want to go from there. But here's Square. It gapped down this morning. And the gap down I noticed last night, I think it was like close to 45, 46. So it wasn't breaking this low. And I was kind of looking for maybe an undercut of this low during the day and then a turn. Okay. But, and Andrew Left or Cleft or whatever his name is, the short seller, he was on CNBC last night doing a victory lap. And so I'm thinking, okay, great. This thing probably turns. And you did get a pocket pivot as it closed above the 10-day line. But notice it's just below the 50-day line. So you might look for this to regain the 50-day line tomorrow morning. So we'll see what happens. It was a very, very funky day. Let's see. What do I want to do here? Look at a few other names. I'm noticing Netflix is hanging tight along its 50-day line. Volume kind of dried up. And I noticed it was coming off early in the day, but it's a $300 stock. So 6 points, 7 points is 2%. So it's really not much. So you got to be watching where it is on the chart. And what I noticed is you did get volume picking up a little bit, but it came off the 50-day line. The other thing you're going to notice, and I could probably make this a little more visible to you. Yeah, this is a little bit more, a little easier to see, but you actually undercut these two lows. There's two lows here, so you undercut those two lows and you rallied above it. This looks like an L formation, so maybe it's a Louis and it's going to head higher from here. That's a possibility. Because the main reason I think it sold off here is because they announced that $1.5 billion secondary or bond offering, whatever you want to call it. Secondary bond offering, whatever it is. And if you're going to borrow money, I think now's probably the time to be doing it. So let's look at some other names. Amazon is holding actually the 10-day line. And, like I was saying last night in the report, you could be shorting this, you could be going long depending on what it does. It looks to me like I was saying over the weekend that this is an allocation trade. So in other words, institutions that are heavy in the stock, and then the same thing might have been going on with Intel. I'll take a look at that on the daily chart right now too. But they sell into it because it could be getting beyond their allowable allocation. So it might be more than 2% or 3%, whatever it is. I remember Will Danoff over at Fidelity, who still runs the Contra Fund, he could have a maximum of 10% positions. So he would load up on stuff. He's very O'Neill style in that sense. And I remember he was huge in Apple in 2004 or 3 when it made the turn. I think it was 2004. In any case, this may actually still turn out to be viable. So I'm open to buying this thing if the market wants to turn and go. Let's look at also NVIDIA. Not really sure what to make of this. The earnings come out. I actually thought it was a short this morning because it was up a couple of bucks and it started to come off. If you look at the 620 chart, I did make some money shorting that. Trying to remember when that was. Early in the day, I just picked it off in here at around, let's see where this is. Early in the day, it got up to like 228 or 229, and it was a little bit of a stretch right after the open. So you had the opening, you had a rally. So when I see that, I'm watching the stretch, and I kind of hit that for a couple of bucks. But I could see at that point, you're kind of turning here, and it wasn't really anything going on. You undercut this low here, so this low here undercuts this low here. A nice arrow there, but this, I don't know what this is doing. It's into the 58. Does it become a short? Maybe, but you got earnings coming out next week, so I don't know. And the other thing here is if I'm going to be looking to play stocks, I want to go with really thick stocks. So I'm interested in playing big stock names, and that's kind of what I was playing. I think Square is a big stock name because it trades very fluidly. You can come in and buy 5,000 shares, click, and that's it. It might move 3 cents or something like that. Intel was kind of fun, and what I'm noticing here off the lows, what it did is got near the 50-day line and undercut this low here just by a pinch, and the volume was pretty light at the time, and the market's turning, and so it looked to me like it might rally, and it did. And right now it's trading. Let's take a look where it is right now. Trading a little higher in after hours. So is Microsoft. So is Amazon. Square is down a little bit after hours. You can see here. Right here, 48.80 bid, 48.94 offered. Here's where we closed. So let's take a look at my action list for tomorrow. So I'm sure you all want to see that. We'll start with Amazon. And I talked about this, just a second ago. This looks okay. Might be setting up. Apple is holding up on the Bible gap up, which I think is constructive. And you might see. Let's get a color that you can actually see. You might see this thing move higher. Volume dried up today, which I thought was constructive in the midst of today's pullback, which is a very hairy pullback, and it really looked like we're going to blow apart. But again, as I was talking about before, I thought that you would get a breach of the 200-day moving average by the S&P, and that would be enough to get everybody really bearish. Because up until that point, everybody was talking about, well, the support is held, the long-term support, and so this is really going to be, the line of demarcation. And when that thing busted hard and the Dow busted it hard today, it seemed to me like you might have been in a position to turn. So when I'm trading during the day, I'm looking at things in a contrarian way. So, for example, when the S&P breaks the 200-day moving average, okay, some people might say, oh, that's very bearish. I'm just going to load up on the short side, just slam everything, and I'm going to make a pile of money. I'm actually thinking the opposite way. I'm thinking, okay, this is kind of obvious, and I'm making some money already because I was anticipating this by shorting into the rallies on some of these gap ups, and therefore I'm looking for a turn. So I've got my antenna up and I'm looking for a turn. And if once I start to see it, I'll just take my profits, or I'll have already taken them based on what I call the piggy principle, which is where you're making like 3, 4, 5, 6, 7% on the day, and you're feeling pretty fat and piggy. Take them. Just take the profits, because this market does not move in one direction very long, and it's not a trending market. It's just a choppy market, and it's probably going to stay that way for a while. Very news oriented as well. So let's continue. Twitter, I'm trying to decide, what this looks like to everybody is, and everybody sees, is a head and shoulders. Okay, yeah, well, that's pretty obvious. If you just read my book on short selling, okay, yeah, you know that it's a head and shoulders. But earnings here, a couple of things to note. 11%, 73%, 129. You're accelerating. Sales -4, +2, +21. And if you add this in, 0%, I'm like Elmer Fudd there, or Porky Pig. Did it? That's all, folks. But anyways, you can see that on an absolute basis, this is an acceleration, and you're up 129. So you're sitting here along the 20-day line. Volume dried up to -37% today. That's a voodoo pullback, everybody. So that's on my actionable list. Snap looks like garbage, but CSX held the 20-day line, and it looked to me like it was, as I wrote in last night's report, that it was set for a test of that. But notice how the volume was -23% below average. That's kind of a drive for a big cap like this, so that counts. So I'm kind of watching this tomorrow. I might turn out of here. That also means that Norfolk Southern might qualify, but here's Halliburton. This is an oil. Earnings up 925%. I mean, this is a good name. Fundamentally, this got some big numbers here, and it's a turnaround. So you're sitting here along the 10-day line. Earnings have already come out. You're right at the 10-day line. Volume dries up 46%. That's a voodoo pullback. I like it. I'm a buyer in here. If the market's turning tomorrow, this is one of my favorites. Norfolk Southern, all the way down to the 200-day line. That may be the point to come into this if you see CSX also turning. Netflix I already talked about. It's kind of a Louis. Facebook, I'm not really clear on. It looks like it's a short. I made money trading this little wiggle long and short, and I haven't really lost money, but I haven't really made a lot of money either. So it's still hanging underneath what I consider an area of price congestion in here. That doesn't mean it can't get through it. So today we closed just below the 200-day line, and volume dried up to -38%. So even on an ugly day, it started out that way. I didn't see Facebook trading huge downside volume. So there is still possibility that it can rally. And then, if I think it's a longer term short, it could easily rally back up to the highs and then become shortable again. So I'm not going to be prejudiced against these things if I have a potential longer term view on one hand, but there's a move that I can play short term that's a decent swing trading opportunity. So, you don't want to get your head stuck in a bear's hole, as they might say. That didn't really sound right, but you know what I mean. In any case, here's Palo Alto Networks. As I've been saying, you want to buy it on the pullbacks of the 20-day exponential moving average. That's what you had today. It held. This thing got tagged because we had FireEye got blasted on big volume after earnings. I don't know if maybe this undercuts this low here, hits the 50-day line here, and then bounces. But they lost money, and I don't think they were supposed to. I didn't really check it because I wasn't long the thing into earnings because I don't play earnings roulette. I may look stupid, but I'm really not. FTNT reported earnings after the bell. They look like they're going to gap up a little bit. Let's take a look at this. I don't know if I have it in here. Where is it? Let's go down here. We'll throw it in. FTNT is trading 56.12 bid, 56.80 offered. So it may open up a little bit, but you might want to watch that tomorrow morning. Weight Watchers also reported earnings. They're trading up at 74.65, which means that would put you right just under here. I mean, so not a huge rally back up to the highs. Now, does that become a shortable rally in the morning or not? Watch your 620. We'll see. So, getting back to this, let's see what else I got besides connections at the airport. To quote Gordon Gekko, let's see. No, that looks like about it. So, I've got some ideas here that I'm working with, and I think what I want to do mostly is stick to big stock type names and something that's liquid because I think this market's going to remain volatile. But I think you're in a position here, especially if tomorrow morning we have some news out of China, because Mnuchin is there with all his buddies. Wilbur Ross, Commerce Secretary, is out in China, and they're all going to negotiate. If they start cooing at each other and say something nice, it could trigger a big rally. And you sort of are in shakeout land, like I said. So the S&P shaking out, the NASDAQ shaking out. Let's look at real quickly. You can see the Russell. Well, I like to use IWM. And notice that's hanging around just below its 50-day line. So, what you've got is a market that's just chopping around. And it is kind of triangulating a little bit. And you can see that also with things like the NASDAQ. That's a similar sort of situation where you have a lot of volatility and zoom, but it's starting to tighten up in here. So it's narrowing. And it's doing it in kind of a horizontal fashion. And so that could be tightening up for a move higher. So, don't discount any possibilities and stay alert and know what you want to work with on any given day. Have a trading plan, and stick to 5 to 10 names. That's basically what I'm doing. Maybe I'll go up to 15 if I'm feeling really multitasky, as they say, and I try to focus on a few things because there's enough movement, rather. I was going to say motion, but motion, movement, whatever. There's enough price movement in things to make money trading them, especially if they're big leading stocks. So you got some ideas. Hopefully this has been helpful for you, and we'll just see what happens tomorrow. So good luck and happy trading. We'll catch you later.